Recording. Pushpinder, can you hear us?
Yes, sir, we can hear.
Good afternoon, everyone. I am Neha Behel, Company Secretary and Compliance Officer of RACL Geartech Limited. On behalf of the company, I warmly welcome you to the post-results conference call for the second quarter of the financial year 24-25. I will be your moderator for today's call. Before we begin, I would like to inform all participants that this conference call may contain forward-looking statements based on the company's beliefs, opinions, and expectations as of today. These statements are not guarantees of future performance and are subject to risks and uncertainties that may cause actual results to differ. Additionally, please note that all participant lines will remain on mute during the presentation, and there will be an opportunity to ask questions once the presentation concludes. If you require any assistance during the call, please feel free to post your concerns or questions in the question and answer box or raise your hand as available on the screen if you wish to speak. Lastly, please be advised that this call is being recorded. We are joined today by the management team of RACL Geartech Limited, represented by Mr. Gursharan Singh, Chairman and Managing Director, Mr. Jitendra Jain, Chief Financial Officer, Mr. Prab Meher Singh, Vice President of Finance and Business Excellence. With that, I now invite Mr. Gursharan Singh for his opening remarks. Over to you, sir.
Thank you, Neha. Thanks all. So, first of all, my investor friends who have joined online, so I'm glad to introduce. We have around 16 shareholders who have physically spent all the time and efforts to visit us at our Gajraula factory. So technically, how many people are on? Yeah. So in all, we are around 35 persons present. So I welcome you all, and I hope the persons who have joined physically, so you had a good impression about the company and the people who are online. So definitely some of the people might have already visited, and we'll keep such more opportunities in the future so that you also have a opportunity to visit us, and we'll be really glad to receive you and when sharing the experiences of you and us together. And while these Q2 numbers are already with you, so I will really hand over the discussions to Prab and Jitendra. They will just run through the presentation, and after that we can, of course, discuss all the Q&A things. Huh? Thank you. So yes, JJ, you can do this.
Good afternoon, everyone. This is Jitendra Jain, CFO of the company. First of all, thanks a lot to everyone who have joined us online. And it's a pleasure that for the first time we are having our shareholder friends physically also available with us at our Gajraula factory right now. And it's an opportunity to interact with them in person in our investor call. So just to give you an overview of the company, we are close to 40-year young company right now. Our head office is at New Delhi. In FY24, we clocked a turnover of close to $50 million. And we have a permanent employees of close to 832. We have our products basically get supplied to all the segments which we can talk about in the automotive sector, be it two-wheelers, three-wheelers, passenger cars, commercial trucks, ATVs, agricultural equipments, etc. We have around 22 active customers and more than 900 SKUs right now. Our corporate office is headquartered at Noida, Uttar Pradesh, India. We have 2 manufacturing locations, in India. One is at Noida, and second mother plant is at Gajraula. As I said, corporate office is based at Noida, and we have around 3 warehouses in Europe. So as far as our product range is concerned, we basically supply transmission gears and shafts, but now sub-assemblies, precision machine parts, chassis parts, and industrial gear. I'm happy to share that our credit rating has been reaffirmed by CARE again this year. So we are rated A- right now by CARE. We are listed. We have one subsidiary which is based at Austria. As far as our competencies are concerned, we have entire bouquet of competencies which you can think of in an automotive sector under one roof. I'm proud to share that, whether it is gear cutting, precision machining, R&D, concurrent engineering, aluminum machining, heat treatment, sub-assembly, laser welding, laser cutting, whatever we can think of. And that's our strength to have the entire bouquet of all the processes under one roof. We have all the certifications which are required, which is ISO, IATF, and all the certifications which are required. Next. So coming to the financial performance for Q2. So we clocked a turnover of about 105.71 crores in Q2 of FY24-25. The breakup of the same is we clocked a turnover close to 75 crores of exports, about 20.76 crores of domestic turnover. Our other operating income was close to 6 crores and non-operating income was about 4 crores. In totality, about 105.71 crores of turnover. The breakup of the same, about 71% is exports and 29% is domestic. So this mix is shifting a bit. Last quarter it was about 73. So now the exports is about 71 and domestic is around 29. Now this is the YOY comparison. So we have clocked a turnover of about 105.71 crores in Q2 of FY24-25 as compared to 103.14 same quarter last year, which is a modest growth of about 2.5%. However, we have clocked a turnover of 22.28 crores in Q2 this year as compared to EBITDA of 22.28 crores in Q2 this year as compared to 25.18 crores last year same quarter, which is a drop of about 11.5%. However, our PBT is 6.75 crores this quarter as compared to 13.62 crores last year, which is a drop of about 50.4%. This is standalone Q1 versus Q2 comparison of sales and profitability. So we are almost flattish as compared to Q1, 105.71 crores this quarter as compared to 105.8 crores last quarter, almost similar. Our EBITDA margins are also in absolute numbers almost same, 22.28 crores as compared to 22.33 crores last quarter. However, there's a slight drop in PBT, 6.75 crores as compared to 8.42 crores last quarter, which is close to around 20%, which again is because of higher depreciation and slightly higher finance cost. Now this slide will give us a view of a slide. So this is basically budget versus actual. So what we have budgeted for Q2 and eventually what we have been able to achieve. And we'll explain the reasons for the same, the headwinds which I think we all are aware the automotive sector is facing right now. But this gap, we had budgeted a turnover of about 113 crores in this quarter, but eventually we have been able to achieve a turnover of about 105.71, which is we missed it by around 8 crores, and which eventually impacted our profitability. So accordingly, we had budgeted a EBITDA of 25 crores, but we've been able to achieve about 22.28 crores. And accordingly, we had budgeted a PBT of about 12.5 crores, but we have been able to clock about 6.75 crores of as compared to budgeted number for Q2. And this is a half-yearly comparison as compared to half year of last year versus half year of this year. So this year, half year, we have clocked a turnover of about 211.5 crores as compared to 192.76 crores, same period, half year last year, which is a growth of about 9.7%. However, our EBITDA is about 44.61 crores as compared to 48.37 crores last year, which is a little drop of about 7.7%. And PBT is 15.18 crores as compared to 25.27 crores, same period last year, a drop of about close to 40%. Next. So I would like to spend some time on this slide. So this is the broad overview of the ratios, half yearly comparison, last year half year versus this year half year. So if you look at our current ratios, debt by equity, fixed asset turnover, total asset turnover, these are almost on the same side, but yes, because of the drop in profitability, it has been slightly deteriorated on the debt by EBITDA and DSCR side. But from a benchmarks perspective and all, I think we are still comfortable. On the debt exposure side, so basically we have done so as we had declared in last call also. So we had postponed a few our investments for this year to next year in line with the situation in the market. So our addition to fixed asset in half year this year is close to about 22.28 crores, which is just 22% as compared to almost close to 57 crores of investments which we had done last year. And our overall debt, so our short-term debt has not increased much, and in fact this will reduce further because the fresh debt on the long-term side is not much for this year. And whatever increase in debt has come in, that has come on the short-term debt side. So our overall debt is about 305 crores as compared to 250 crores, same period last year. Our cash generations have been better this year, this half year. So our cash from operations, which was about 10.81 crores, no, one before. Our cash from operation, which was 10.81 crores half year last year. This year we have been cash from operations generated from operations about 19.8 crores, which is a growth of about 83%. Then this is the overview of profitability. We clocked a gross profit of about 151.75 crores. So gross profit 71.7% as compared to 72.38%, almost similar. But EBITDA of 21.09% as compared to 25.09%, and PBT of 7.18% as compared to 13.11% half year last year. Next. So this is something which we have discussed in last call also, and we wanted to continue with this thing. So as we had explained last time that we are a growth company, correct? As I had explained in the earlier also that we have more than 900 SKUs right now, and one of the challenges which we have growth which will come in. I mean, the focus right now is to have more value add and the bigger products and all, rather than manufacturing small products and keep on increasing our SKUs. As we had explained last time, we are now getting a lot of traction on the passenger vehicles. Earlier we used to be predominantly supplier of products for two-wheelers, but now we are doing our share of passenger vehicles and commercial vehicles are increasing, which are bigger products, which have a little more manufacturing period and all. But then you have to grow the same kind of, if we need to grow and all, we have to grow in all the sectors. So that will have some impact. And of course, we have not been able to achieve our budgeted numbers, but some investments which have been already been done, and there's a fixed cost which was already incurred, has already been incurred. So that is 24. Is this one? From Q2. 23, 24. पिछले हाँ ये क्या होगा यहाँ पे 24 20 इस बार का कंपैरिजन है फ्रॉम 23 24 लास्ट ईयर के H1 से 2020 दोनों अपने लास्ट ईयर फ्रॉम Q2 ऑफ लास्ट ईयर फ्रॉम H1 ऑफ लास्ट. So if I look at the breakup of impact on profitability as compared to Q2 of last year and then as compared to H1 of last year. That's what this slide is showcasing you. A breakup of, so as I explained, our PBT has reduced as compared to Q2 of last year by about 6.82% and difference of 5.93% from H1 of last year, whereas the EBITDA difference is about 3.35% and 4% as compared to last year percentage. The breakup of the same is this. So if you see from Q2 of last year, our consumption of raw material was better because we have been able to pass on some steel prices and all. But from an in Q2 of this year, but on H1, if you look at H1 comparison from last year, then still there is a drop of about 0.64%. The impact is there on the profitability. However, since we have been able to pass on the steel on a full year number, this will add to our this will help us in better margins on a full year basis. As we have said that keeping growth in mind, yes, our employee costs have increased. We had hired people and all. So there is an impact of employee cost. Major two heads which have impacted our PBTs is obviously the higher finance cost and the higher depreciation. The investments which we had done last year and all. So depreciation of that have already started kicking in. And unfortunately, that predicted growth hasn't come in. And obviously the borrowings on the long-term side which have been taken for the same. So finance cost has gone up.
I think what we're trying to say is for everyone, had we achieved what we budgeted, which was basis our customers' projections and market dynamics, as you know, we revised our sales plan this year. We revised, I think, mid of this year, saying that we will not grow at 30%, 35%, we will grow at 18%, 16%. Basis that we created the sales plan. So basis that the costs were allocated, but in regard to the revision, again, when we have achieved this quarter, we were not able to achieve what we budgeted. Reasons we'll explain in the coming slides. So because of that high base effect, because of the costs you've already invested, so depreciation and finance costs you have to bear. So if we were able to convert that sales, that would have created more profits for that bottom costs to be taken care. On the operating side, you see cash generated from operations have improved. So we've seen, I think, 80% improvement. So that was liquidity, operability wise, things were okay. But this bottom line, because of the high component of investments, is creating that decline. And second, I think if you see the impact on the operating marginally is not too high. So if you see the depreciation impact and the employee benefit impact, that again, when I say employee benefit, we have to do increments, we have to do as per the talent for the future. We can't create salary disparities because of short-term issues. So we will not discontinue our commitments there. So these things play some role in these numbers having a not so good projection versus the actual. Yeah, next.
Next. Okay. Yeah. So I'll tell you. So here we have tried to just brief in what exactly I think the headwinds which the automotive sector is facing right now, and it is nothing specific to RACL. And I think you all are investors and you have been studying I'm sure you all have been studying the market right now. So the headwinds which are already there in the global scenario, and we being predominantly an exporter, though there have been some headwinds in Indian automotive sector as well, but predominantly I'm talking of European markets right now. They have been facing these challenges for last, I would say, 6 to 8 months. Now, one of the biggest challenge which European sector is facing is a very high competition from China. Okay, now that is China has emerged as a leading global auto exporter, more specifically on the electric vehicle side. The kind of costing and all with China, and I'm hoping, and someone asked me this question on the lunch table as well, that whether Trump coming is good for us or not. But I think Trump coming, I mean, the way he's looking at Chinese market right now, and Chinese market is impacting China automotive sector. They are impacting. He's planning to put in hopefully some So, but that is one of the, because a lot of vehicles from Europe and all were getting exported and all, which are impacted heavily because of competition from China. Second reason, which we had explained last time also, and this is a fact, I think the way European markets have expected the adoption of electric vehicles, that has not picked up the way they had been expected. Still, there is I think the kind of infrastructure which they were supposed to create which is a condition in India also, but Europe is much ahead of us right now. But still, that kind of infrastructure has not been created, but they have committed to convert the maximum of their motor vehicles to electric mobility and all. So there is a confusion in the eyes of the consumer. So people who have to spend on a vehicle and all, they have been delaying their decision right now to have more clarity on the adoption of electric vehicles, and which is impacting European automotive sector significantly. Yes.
We analyzed, we are predominantly dependent on Europe as a big destination for our exports. To be very honest, almost 70% we are exporting, around 70%, but 50% around. We analyzed that why this situation has suddenly. But if you remember, there are some of the investors who are interacting with us for the last 2-3 years. I was always maintaining that e-mobility will never replace IC. It may coexist. Europeans actually did a fundamental, I will say, mistake or whatever. What happened? Like Tesla suddenly dominated in US market in a big way in e-mobility. And then Chinese, they have their own unique style of functioning. They dumped Chinese market with Europeans until 2020, 2021, they were technically not taking this decision. And suddenly they found it could happen that we could be left behind. The mistake which this all big guys did, they stopped innovating new models on fuel and they put all their resources into electric. The idea was that they should be able to fight against Chinese onslaught and American Tesla. Unfortunately, and fuel to the fire was that European Union also, like India, also they said that usually, in 2020 Auto Expo, within countries that 2030 will bulldoze the ICE engines. After 6 months, he realized that he made a mistake. He said, let the industry decide. The European Union did not understand. And unfortunately, after the Ukraine crisis, the energy prices goes very high. You have some data. Energy price of Germany as of today is 3 times the price which we are paying for electricity cost. So technically, whatever electric car is selling, so it's not that now it's very, very economic to them. The energy cost is so high. And of course, the infrastructure. Eventually, now situation has come. Europeans don't have much new models to offer into ICE. And electric mobility is not selling. And then on top of it, Chinese dumping is creating this problem. Now they realize this. This has to coexist. That's the reason European Union also has now changed this 2030 to 2035. So had it that the decision be taken by these politicians in time, probably the disaster would have happened. And many big companies, as JJ said, that this onslaught would have not RACL specific, not any industry specific. Entire European industry did like. During COVID, to be very honest, this work from home culture killed that idea of sitting together and redefining the strategies. Rather, they were following like a blind horse and they fell into it. Now they arrive. You might have heard Volkswagen is shutting down 3 factories in Germany. This is a big crisis. Because I don't know it happens or not, they say 130,000 people are at stake. Our own customer, ZF has lined up a plan to reduce 15,000 people. But everybody was spending like mad people in e-mobility. Now, situation has come, and like JJ explained, consumer was worried here because like in India, because for 1,000 people, India cars are, I think, 15 or 20 as of today, I think. Or US is 550. So to be very honest, there is no market in US or in Europe for new cars or the new customer. It is only a replacement business. Means people buy new car and sell old car to Africa or South America. That's all Africa and South America and Middle East countries, not UAE and Abu Dhabi, all the remaining countries bought on used cars from Europe. So technically it's a replacement business. But now consumer says, yaar, okay, yaar, power electric aayega, ke fuel aayega, other people have deferred them. Due to which this changes occur. But now all OEMs are working extra time to again redefine the hybrids. Eventually now people say in Europe, they are working very strongly with hybrids and good for us. There are some challenges in short time, like you explained, long term. Here business has to go. Electric mobility also will gradually build up. Now European manufacturers have understood that they have to focus on the last 3-4 years. They were just not sleeping, just to save them or themselves. Now Chinese and Tesla capture the entire world. So they increase their focus. You know, Audi, from how much numbers you were telling that Audi has unsold cars? Yes, a huge inventory. And now they are dumping at discounts so that they really get the money back and then they invest into new model. This has really created some ripples in our operations. And like whosoever is really depending mainly on Europe. So yes, JJ, you can continue because I just wanted to. This has actually macro issue has occurred in here.
So sir has covered some of the points. So high energy cost, sir has said that is one thing. I just want to touch base on 2 more points which are there. One is disruption in key supply chains. Now basically, if you were now that like the Red Sea crisis which had arisen and all, and the overall shipment periods have gone up, and it has persisted for a long period of time and all. Now that is something which has impacted because first of all, our shipment periods have also gone up as high as by 40-45 days. So though it has come down, and then the European OEMs also, they wanted to stock as much as possible because they didn't have the clarity how much time they will take to get the new material and all. So that is one thing which is now they are at a stage that they now have to clear the inventories and all, which the high inventories they have created. Now that the situation is improving. And one more thing, which is the geopolitical risk, which we all are aware, Russia, Ukraine, Israel, and all these things somewhere creates confusion and so all these things put together have impacted the automotive sector in Europe significantly. So this is one slide which we have tried to put in and try to capture as much data which we can, just to show how the situation looks like. And we have tried to focus on the historical numbers and the signals which are coming from the historical numbers to give a view of how do we see it. Now, if we look at new EU car registrations, okay, now for the continuous decline for last 3-4 months and decline as high as 12-13% also in the month of October, the new EU car registrations have got a modest growth of 1.1%, which in our opinion have started now signaling that the market should start picking up from there, because last 3-4 months and all, there have been continuous declines in new EU car registrations same month last year. That's a comparison. That's on the passenger car side. If you look at the commercial vehicles, so new EU vans and buses registrations have shown growth as compared to H1 of last year and all. But the new EU truck registrations have still need to pick up. Their decline as compared to the same period last year have come down, but the growth have still need to start. Now, if you look at EV sales, now electric vehicle sales numbers as compared to H1 of last year in different geographies. So all the if I talk about China, if I talk about North America and all, they have shown a significant growth in their EV vehicle sales, whereas Europe is the only place which has shown a modest growth right now. But still, it has shown the growth. So we still feel that now Europe will have a once this China thing is taken care of and all, then Europe, in our opinion, is expected to then start picking, because they have all the infrastructure, they have all the quality vehicles there. But but the growth of electric vehicles in Europe still need to pick up. We spoke about the infrastructure in Europe for electric vehicles and all. Now, total charging points which were installed across Europe now exceeds almost 630,000. That again, we have taken numbers from some renowned reports and all, and they have a target of having a goal of 1 million charging points by 2025 and 3 million charging points by 2030. So they have realized that this is one of the things which is most important right now to clear that confusion in the eyes of the customer and all, and of course for the growth of the electric vehicles which they have been suggesting. In our opinion, right now, we feel that this current year is a transition year. This year has been a slightly eye-opener for Europe, where the kind of focus which they have been putting in only for electric mobility and all, this year has been a transition year for them. And somewhere we believe that now in the coming years and all, they have also realized that ICE engines, electric vehicles, and other vehicles and all, they will coexist, but maybe electric mobility the growth of electric mobility percentage may not be that big. It will grow, but the ICE engines and all will also exist. So this year, current year, is a transition year. That's what we think. Anything you want to add, sir?
Yeah, third most of it. You got a good data on the charges.
So this is about the economy and all. Now coming to the good news, coming to news for RACL, I would say. So next slide. So I take pride in sharing. So we have got one more nomination from a big German player, and it's BMW. So we have got a new nomination for supply of drivetrain parts for their electric sports car right now, and this is a very big project which we have got the nomination from BMW. I'm happy to share, and as you all must be aware, we had got one nomination from passenger car vehicle from a very big name in Germany in June. So this is the second nomination which we got within the span of less than 6 months from a passenger vehicle and there in Europe, and which is in the passenger car segment. This is BMW, and these are the parts for. These are just representative pictures which we have depicted there, and the commercial production for this part is expected to commence from 2026.
Yes, of course, this sets right some of our investor friends questions many times that why RACL is not so present in e-mobility. We are always there. About 10-12% business is already going. This business is, first of all, going to be a very, very core business in electric mobility. Because I have all the details of this particular project, but because of confidentiality, I cannot share. This electric car is going to be a unique car in itself. Whatever electric cars are there in the field today, this car is at a different level of performance, different level of premiumness, and customer is of course BMW. They are projecting very high numbers, and the numbers which they have shared with us, it will really take this company much our levels of performance as overall revenue, and our exposure to e-mobility will also increase substantially. And This now synchronizes with our vision. You know, I am always maintaining this vision for the last 4 years because e-mobility alone will not never survive. This is clear, at least for next 5 years with the current technology. Tomorrow, some new technologies come. I can't really comment, but with current technology, e-mobility has to have a hand-in-hand growth, at least in passenger cars and the segment where we are, premium car. Urban mobility, local taxis and cabs, we can't really comment because, of course, and we are saying that global perspective, not as the Indian perspective. Indian perspective, I personally feel e-mobility impregnation passenger cars will be further lower as compared to rest of. As in India, develop e-mobility infrastructure is too far-fetched task. Big cities, it will still come, but we are 140 crore people, and there are villages, there is no electricity, but there are still the cars. So eventually, those areas will still remain. I mean to say that there is e-mobility information will be geographical presentation, even Africa, South America. E-mobility will at least not come in next 20 years. But we got a very, very major boost because this is a premium segment, BMW, new level of cars. So this is going to hit once it hits the market, it will definitely change the numbers in a big way for customer and ourselves.
This will help us in segment diversification also, because this is passenger car.
And having a fair presence in a balanced, more balanced way.
More balanced. And this is directly from OEM.
Yes, directly, yes. Direct supplies to.
These are direct supplies from.
And they are hardcore our expertise because they are actually the gears.
So this is a project update on, this is a status update on Project Titan, which was the earlier nomination which we had got, and those people who were joining us for the, who may have joined us for the first time. The Project Titan, basically it relates to SOP as a series supplier for premium German car manufacturer.
Again, BMW, it's the same model. But the only thing is they were complex assemblies.
Yeah.
So they nominated before. And this was, of course, a small thing. Now, next level.
We can disclose that.
Yeah.
So, as I had shared last time, last time we had allocated the separate shed for that. Now, just to show to all our friends and partners, the shed for this project is already ready. The line completion of this, we are expecting will be completed by January 2025. We had already ordered machines for this project, though the investment was not very high, but whatever machines we have already ordered and their arrival is scheduled on time. Now, this is one thing which I want to share. This is, so our first sample phase has been completed successfully, right, in less than 6 months. So basically, as we have said, that the registration period for these products is very high. It takes about a lot of sampling and a lot of to and fro prototypes and all which happens. So we have completed a supply of first sample, and they have approved our samples already in less than 6 months, which in our opinion is a very big achievement. And which means whatever the initial quality standards which was set by BMW for this product, we have been able to meet all those standards as per the first sample set. The second trial phase of the samples is scheduled in Feb 2025. And if everything goes well and all, we are expecting the mass production of this product from August 2026. So till now, everything on track for this project. Next slide. Yes, one more good news. We have decided to get
all our investor fraternity will be very happy to. Many people are always saying that why you're not listing on NSE.
So we have decided to get a stock listed on NSE. We have already got approval from Board of Directors. Our application is almost at final stages right now at NSE. So hopefully we should be able to share the good news soon. So our stock will be listed on both the stock exchanges in India. And of course, it will help our investor fraternity to access more capital. And of course, for us, it will put more challenges for us and all to be better transparent. I think it will help us in more efficient and better transparency.
So let's take the opportunity to compliment you and your secretarial team for
My secretary.
achieving this landmark. Because getting listed in NSE has lots and lots of compliances and they were really. So I think now you can invest more in NSE also.
Once we get the approval and can share.
Yeah, we are waiting. It may happen any day.
Yes. Again, one more thing, as we have always maintained that our corporate governance and all, we focus a lot on that. And being a major component supplier to Europe, we have a lot of focus on ESG, environmental, social, and governance. So we are happy that we have gone through one of the rigorous exercises of Dun and Bradstreet, which is a recognized name. So they have their ESG rating mechanism, which methodology they follow to rate a company on global ESG standards. And we run through that and all. And now we are officially registered, ESG registered under Dun and Bradstreet, as per the global standards, which is followed by BNP. Of course, it will help in basically we want to be compliant with all the European standards and all which are there. And
we are already registered with Dun and Bradstreet for the financial rating because you can't do business in Europe and US until you are DNB registered. We are registered with AGs for last 15 years. Now this is a new registration of ESG because although it is not mandatory asked by our customer, but we have mandatorily ourselves registered with them. They have already did the rating and very soon which are available on DNB website. So idea is that we always over lunch we discuss things ahead of time. So before the customer asks, are you registered on ESG? They were already. Yes. So again.
So one thing, this BMW project which we have got, one of the advantage which we had among all our competitors was that there's an ESG audit which they conduct and all. I think we were the only company. Not sure.
Yeah, electrical energy, we were the only company. I was explaining somebody. We had four competitors from India. Means 4 bidders, 1 plus other 3. And they all wiped out only because of that we were green energy. And they say it will take 2 years. They say, sorry, you can't even give us the first one. Our nomination took place for that project now and 1 month in March. We were registered somewhere in 1st January 2020. So this is how, and somebody asked that why you joined the Citibank, why joined RACL. Jitendra Jain is leading our ESG compliance, entire ESG department. So he would have never got an opportunity to work on this project in the bank. So
now I know all the global sectors.
Yeah. So we have a full environment management department. We have one gentleman who is a MTech in environmental sciences. And he reports to JJ, and this team has really worked a lot on rating. Now there's a CBAM registration and all such stuff, carbon CO2 emissions calculations, and also he's handling all that. So we start charging a premium like Zomato.
Questions below?
So yeah.
Leave to the bottom. Leave to the bottom.
So you can ask the questions.
If anybody has a question, you can maybe type or there is always raise hand. Sorry. I'm unmuting the pun. If you have a question, I'm unmuting you. Yeah.
No.
Mr. Deepan? Deepak, maybe Deepan? You can unmute yourself and ask. Okay. Then I'm unmuting. Sorry, I'm allowing mic for Prateek Kothari. Mr. Kothari, if you can ask question by unmuting. Others may raise hands, whosoever have questions. Prateek? You made everybody sleep. Okay, I hope you are able to hear. Not unmute.
Oh, maybe you could.
Manish, you can unmute yourself and please ask. Mr. Manish Gupta. Unmute.
Can you share?
Yeah, you can, if you can put the question on chat. I have a chat window question and maybe you can read it. The chat. Yeah.
The question is, can you give some color on the segment-wise concentration? We appreciate that overall auto sector has headwinds. However, the highest concentration for the company is on EU, two-wheelers, and also the overall RB/ATV segment. How are those doing specifically? Are there more structural or long-term reasons behind the two-wheeler issues?
So 6 months हम लोग calculate नहीं करते हैं segment wise.
But we are asking headwinds, as far as headwinds are there, right now I'll focus myself on EU because since our main presence is in EU. Right now, EU sector issues are in all segments. But one thing which we have observed by and by from all our OEMs, that retail sales has not declined that much from the dealership level. Reason which they are posing that when this Red Sea and all issues came, they produce extra quantities and, Europe doesn't produce and sell vehicles entirely in Europe. They sell pan the globe. They sell to US, they sell to Canada, they sell to Australia, New Zealand and whatnot. They say because the Red Sea crisis was there, they dumped extra inventories at the dealers. And now they realize that inventory has not picked the pace because, of course, when I say that retail sale has not declined, yes, it is almost consistent, but it has not increased. Then COVID times, all this premium luxury segment was really selling big numbers. They were actually producing at the same pace and extra pace to take care of inventories, means lead time of delivery. Now they are doing kind of stock correction. So as a supplier, we hit double because on their side, their dealership inventories have increased, so they are correcting their dealership inventories. From input side to safeguard their lines for going dry, they ordered extra materials from us in 2023. So now they are creating those inventory corrections at our end now. So eventually now we are also taking the same pace. There is no point in keep producing and selling. So we also has started controlling our production. So, but technically, I'll say that whatever huge growth was showing visible in COVID times on these OEMs, that growth has sucked out. But there's not real decline. At the retail level is good, but it is generally across all the segments. But today only I was having call with one of our customers selling those ATVs and all such stuff. They say that our November forecast has really picked up. Reason that they're making snowmobiles. And this time there is a big prediction that northern hemisphere is going to have very, very harsh winter. Very heavy snows. And in fact, today morning you had seen in Canada, US, there's lots of snowstorms that started coming in. Even in North India, in Gulmarg, you got 4 feet of snow in October. So due to this, snowmobile business has started picking up. So now I'll say the green shoots have started coming. But of course, their idea is first to liquidate those inventories. So let's really wait and watch. But as of today, it's pan all the segments. It's not because like JJ showed in October, the car registrations in the EU has increased. So these are the green shoots where eventually things are really showing up. I think I've been able to clarify.
Sure, thank you.
Yeah, okay, perfect. So, any other question? Yeah, unmute after. What's the
Hello.
name? You can.
Hello, am I audible?
Yeah, please. Yes, please carry on.
Thanks for the opportunity, sir. So earlier, products sold are majorly value-added products. Now we are catering to volume businesses with no margin. Say, for example, in earlier business update slide, a few quarters back, you have mentioned you are getting orders from Indian two-wheeler OEMs also. So just want to know what's the overall margin that you are targeting to achieve in the next few years or over the medium term.
Yeah, your voice is actually, it's having a lot of echo. So
Okay.
I'm not able to give us the export serious.
Shall I repeat my question once again?
No, I actually have not understood. Can you repeat? Because there is a lot of echo. Maybe you are on speakerphone or how?
No, I am connected to my headset, earphones actually. I will repeat once again. I'll be pretty louder this time.
Yeah.
So, is my voice audible now?
Now
Is
it's
it better?
perfect. Yes.
Yeah. So most of the products to sell majorly were value-added products. But now we are getting orders from Indian two-wheeler OEMs also. So I just want to know how would your margins be going forward? How much margin you target to achieve since you're getting orders from Indian two-wheeler OEMs. So basically, domestic customers won't give you good margins, right? So want to know how your margins will be going forward.
We always work on creating a balance. So when we, on one side, we really are finding that we had too much of exports to European Union. And now, when we face that, where do I find the way, how do we take the corrective actions? Then we realize that, okay, the immediate best thing is if we can develop some domestic business, then in this we can have faster recovery of receivables because, in export business, biggest issue is receivable is very high. Receivable time is very high because 60, 70 days is a normal shipping time. And thanks to geopolitical things, is going now 75, 80 days. And then their credit period and all. So money comes 120, 130 days. So now we said, okay, we should focus on some domestic business. Maybe direct margin may be slightly lower as compared to exports. You are right. Domestic margins have to be very, very competitive. But then you get better receivable management. You get money pretty fast. So somewhere it balances out also stuff. So our issue is that, okay, if there are headwinds, we have to really ensure that how we sail through comfortably out of this crisis. So this is how, we are a company who is highly flexible and very, very dynamic in taking decisions. So this is how we are deciding this strategy to find some opportunities in domestic market. And let me also say you that we are not focusing only on domestic two-wheelers. We are focusing on domestic passenger cars also. Because once we get nomination from European OEMs, eventually message spreads very, very fast. And we have been in very, very serious discussion with a couple of domestic passenger car makers also. We are focusing on this field. This will be a new opportunity for us to work. And since we have created huge technology capacity available with us, so if there is any unutilized capacity or due to this European issue going on, so we'll deploy these capacities immediately to ramp up domestic business. Domestic business advantage there because when you say margins, per piece margin may be slightly lesser. But now in domestic gestation period is not so high because domestic companies don't go so exhaustive validation testings and all. Like BMW will test the car for 2 years. Domestic companies will not do for 2 years. They may do only for 2 months or 3 months. Because so this is how we are taking corrective measures. I hope and I've been able to clarify your query. Huh?
Yes.
Thank you.
On
Thank you,
average, can we get the margins that we can expect from domestic customers?
Yeah,
Average.
look, I cannot give you generic answers because each product, each component has a different costing, different, it all depends. But on a comparative scale, yes, you are right, domestic margins are generally more competitive. Because there's a difference. When we say competitive, doesn't mean that because in domestic there's an advantage. Now, particularly you are asking two-wheeler in domestic, is really if you get access to this, here volumes are very high. So obviously, you maybe you make less money per component, but you get some high volumes. So we are just scouting for it, and then as and when it really takes place, then we'll get more clarity on the numbers. But of course, whatever business we do, we always do with a comfortable margins. We will never, because we are not under any pressures to start selling the parts at a low price because we provide customer value for money. Domestic business low margin doesn't mean that customer doesn't want to pay. Because when there is a question of premiumness, so then they come to us. Because there are many domestic companies, they will not give us their routine 100cc, 150cc bike. Moment it is 300cc, 400cc, 500cc, all people will come to our door. So no, we will not go with any other supplier for these premium bikes. For premium bikes, you have to come to us. So it is a domestic market, but still premium. So margins will, okay, not comparable with Europe, but obviously not comparable with 100cc bike also. So we'll definitely maintain our core strategy of remaining in premium.
Understood. Sir. Sir, one last question. Just want to know, do we supply any value-added products to Indian premium two-wheelers and passenger vehicles? Premium passenger vehicles.
I already answered you. First of all, we are already supplying to Indian two-wheeler manufacturer. Yamaha is our major customer. You all already know it. Piaggio has launched Aprilia RS 457 motorbike, and I'm proud to say that 100% gears are coming from our company. So we're already there in two-wheeler premium segment. It's not that we are not there. I think all of you know it. Aprilia is already launched in India, and they are going to ramp up their production from January to big numbers. And Aprilia, because in India, they have launched 450cc. Now they are launching a new bike, 660cc in Italy. In fact, this recently concluded that ECMA 2024 in Germany. They already launched that bike. It came with our product. 100% gear parts in that Aprilia 660 goes from here. Of course, the export business, the customer remains the same. So we are there in two-wheeler business already in premium segment. Okay? Yes. Yeah.
Online
में करो then we'll ask.
I can. Am I audible? Hi, this is Pratik.
Yes. Hi, Pratik.
Yes, hi, sir. Sir, 2-3 questions. One, again on the Europe. So, I mean, we did speak about a couple of challenges that we are seeing in Europe as a geography itself. But also one of the issue there is because of this heavy Chinese imports there, and the European Union itself is talking about imposing some import duties. Though we are not sure how effective this will be. So, my question is that at the end customer level, the cars or the bikes might still sell, but it might not be by the European OEMs. It possibly the Chinese OEMs sell that. And I believe we don't have much large presence in across this Chinese OEMs who kind of are exporting their way out across the world. So just one, your thought about how do we solve this? I mean, are we incrementally are we putting our efforts to kind of crack the Chinese market or Chinese OEMs? Because even they are talking about setting up some plants in Europe, BYDs of the world.
To be very honest with you, China has some geopolitical issues with our country because our import duties within China are very high. Because, but our product attract a custom duty of 15% in China. So obviously you can understand to compete a Chinese supplier, I have to be at least 15% cheaper. So obviously in China it's not so simple to compete because of, India and China, you all know it. Our relations are not so neither we are the most favored nation to China nor China is most favored nation to India. So really can't do much. But obviously when they go to Europe, so they have to think the European way. Then they cannot think the Chinese way because car maker is a Chinese or American or an Indian. When he goes to Europe, European custom duties will attract. Then eventually we will be able to compete once they are there. But within China, yes, it seems little difficult because I told you our product attract 15% custom duty because it's a little irony. Our Indian, I'm really sorry, I cannot make any political statement. We got one business opportunity from Vietnam and I was shocked. Custom duty on our product in Vietnam is 45%. And the reason is that India is not a signatory to that. Those, because ASEAN was there, then they created that 10 countries nation, and unfortunately, our external affairs ministry is handling the commerce ministry also. Jai Shankar always feels these political things. So eventually, Vietnam and India is in crossroads. I do not know how semiconductors are happening, but our products are attracting 45% duty. That JJ, I had a discussion that is gone. 45% duty, you can't really sell the part at 50% cheaper. And the competition was with a local Vietnamese company. So these are, geopolitical things which you can't really control. But yes, to answer you, and if BYD goes to China, then definitely we will hit BYD also. But then 15% duty will not come. No? Then only 3% duty will come. And I'm glad India is almost at the final discussions of signing FTA agreement with the European Union. And if that happens, our country will get advantage because we pay at least now 4% duty in EU. We don't pay, our customer pay. But if that FTA happens, our product gets advantage. So this is how things will work. But as and when I explained you, I think maybe.
So, sir, I'll read out. Actually, there are two questions on.
No, I have a couple of more if you don't mind questions.
Pratik, can we take two questions from because we have a lot of people waiting here physically as well.
No, I know. I just asked one, and hence if you allow.
Ask one more. I think let us limit to two questions per person. Yeah.
Sure, fair enough. So second on this other income, it seems very high. Anything particular to call out?
Second is what? Come again?
Other income.
Other income is what?
I mean, it's very high versus our history. So anything to call out here?
Sorry?
Other income is very high.
Yeah, I mean, it used to be 0.5 crores to 1.5 crores. This quarter is 4.2 crores.
Is it a compliment or is it?
No, anything specific, anything one-off? I mean, how to read into this?
Actually, we do a lot of prototyping and all, a lot of, since we get many nominations, so we get some income out of those businesses. And that is a kind of windfall we get it, this is an advantage where we make some money out of this. So I think other income has tooling income and then some Exchange rate fluctuation. Yeah, exchange rate.
Exchange rate fluctuation.
Yeah.
Because the dollar
And if there is any old asset sale, that also go to other income. Yeah, because some old asset sale also, because since we are now disposing of some old equipment, because since we have already upgraded technology, so whatever the old technology we are gradually now disposing of. So that may be, it's one of its kind.
Yeah, thank you.
Okay. Thank you. I'll read two questions which are already there on Teams. So Mr. Manish Gupta has asked, sir, that the automotive end sector is very competitive with low margins. This will imply margin pressure on us always. As our competency is precision engineering, how would you think about proactively diversifying into industrial sector? That is first question. And second, we aim to get some incentives from UP government for capex. What revenue targets we need to meet to say 2029, where we will do capex to earn these incentives?
No, I'll answer you both this question. On this UP government incentive, I think we already announced in one of our investors call, and we disclosed on our public domain also that we have signed an agreement with government of UP, wherein we have to invest total of 250 crores from November 2022 until November 2026. They have given us a 4 years window. So we have already signed 250 crores of investment into that. Government of UP has already approved our investment subsidy, and they have given us a letter of comfort also for that. And threshold limit of that is 200 crores, because as and when the 200 crore things get finished, we can even start claiming the subsidy, but otherwise within 26 we have to do it. And I feel that we have already invested 150 odd crores by end of this. Yeah, and maybe so. Once we touch this 200 crores numbers, we will crack that threshold, and then we will approach them. And then there is no linkage with the revenue. It's only on the investment and employment generation. So those numbers we already taken up, we are going to maintain it. And I feel I have been able to clarify. What was the second question?
So, diversify into industrial sectors, because we're precision.
You know, we are already doing some small numbers in industrial sector also. Huh?
initial discussion.
Yeah, so we are already doing some business in industrial sector, and we are already working with even the public sector for some defense equipment, and also we are not disclosing those things. But and we are discussing with some new customers for making access into this business also. Because we are discussing with some customer for product for medical equipment, like your CT scanners, and also they have some products over in gears over there. We are already producing some gears for circuit breakers, which is on electrical installations. We are already doing it, and we are discussing with some new customers also for heavy industrial segment also.
Thanks, sir. Sir, one more question from Mr. Saransh. Sir, I would like to discuss about the customer concentration. Currently, we have 22 customers. A significant portion of our revenue comes from a limited number of large. Can you walk us through your strategy to diversify and expand our customer base?
So give us another couple of calls, you will get more information on new customers. You know, we have always said that every 2-3 years we add one customers. And we are having 22 customers. When we say 22 customers, it doesn't mean that we discuss only 22 products. Product may be 100. Because like, I'll give you an example. ZF is one customer. So you may say ZF is one customer, but we don't work only with ZF as a customer. Parts which we supply to ZF, they supply to Mercedes. So technically, some customer is Mercedes. Then they supply those parts to BMW. So some customer is BMW. Then they supply those parts to Porsche. So customer is Porsche. They supply some numbers to Aston Martin. Okay. And one of the top premium car. So he is also one of customers. So, and Rolls Royce. So, so technically speaking, this product has such a wide diversification. So technically, we have captured all these big brands. Because these days, we say Volkswagen as a customer. Now we like to work with MAN trucks. So it's not only MAN. The parts which we produce, they go in MAN, they go in Scania. And I am really surprised. One of our part goes, we supply to MAN. MAN makes that gearbox. That gearbox they supply to Daimler. Means their own competitor. Because they say our product is so good that Daimler purchases from us. So technically, I was not knowing it. That SOP started only a few months back. And then when I visited there, he says, "Meghayar, why your numbers are not increasing? Sir, wo aapka bhi Daimler ka approval nahi hai." I was surprised. Okay, we are no, your parts has to go to Daimler also. This is how. So actually, if you see some customers, you said the business is concentrated. It's not concentrated. When we supply to ZF, ZF may be 15% or 10%, whatever. I don't know what 15, what 10%. But sub-segmentation of ZF is not, it's maybe 2% to BMW, 2% to Mercedes, maybe 3% to Porsche, something like that. So there is a huge diversification over there also. And we always, we are this very clear that there are not hundreds of car manufacturers in world. You can count on your fingertips. Upper limit, there may be 5, don't have the numbers. In all, there may be 40 car makers, maybe 20 motorcycle makers or 30 motorcycle makers. So I can't really say I will have 200 customers, but I'll have a big customer, then he will have some customers. Like for BMW, if we export to BMW, it's not that we supply to BMW for one particular motorcycle. They will be 1 liter motorcycle, 500cc motorcycle, 1.8 liter motorcycle. Again, there is a different product diversification. Like for BMW motorcycles, we work a bike which is 300cc, we work a bike which is 800cc, which work a bike which is 1.3 liters, we work a bike 1.6 liters, we work electric scooter, electric motorcycles. So there are 7 products portfolios. So each has because overall we will be selling 20%. In this, maybe few percent here. So that way, our customer, as on today, also is a very, very. So I hope I was able to clarify. Yeah.
I think we can take questions.
I think you have.
Yeah. So during the AGM, we reduced the sales guidance for the whole year from 550 crore to 450 to 490 crore. And now looking at the current scenario, looking at how the OEM must have commented to you regarding the H2, can you your revised guidance of where this number is likely to end up with the top line as well as something on the margin front?
To be very honest, we corrected our H2 performance based on some forecasts given by customers. You are right. Even now, we are finding that those forecasts are not really achieved. And our customers are also, because since their calendar year starts in January. So before they go for Christmas vacations, those people have to really give us the forecast. Right now, the real things are not come. But to be very honest, we are already planning visit to Europe to have a face-to-face meetings and discussions to get a realistic numbers. Based upon that, we will definitely be able to give more crisp information. But today, I'll say there is a mixed kind of situation because some segments we are finding that yes, growth is not showing visibility, but in some segment we started feeling that yes, some green shoots are there. But only thing is until customers give their realistic forecast, I can't really make it out. But things are not, as on today, not very, very right, but they are not very gloomy also. Okay. We are just kind of wait and watch. But clarity will come by before Christmas in any case.
The question was on the debt levels. Increased all the model 314 crores in this quarter. What are we doing to reduce those debt levels? Any plans of raising additional funds because debt equity is now reaching up towards 1.5.
No, as JJ has already explained, that first step we have already taken, we have cut down our capital expenditure this year. And I personally feel that.
Now the fresh debt, which the repayments which we had shared last time. So our repayment this year are around 50, little more than 50 crore. And the additional term debt which will come on the books would be close to 27-28 crore. So because अभी
long term debt will
draw down हो चुका है, तो अब जो next 6 months and all है उसमें सारा repayments ही है.
280-290 crore का end है.
हाँ वो है, plus working capital में भी we are working on few structures and all, and obviously अगर business growth momentum उतना नहीं रहता है तो working capital outstanding will come down automatically. So that is one thing. Plus we are also working on, can't share few things right now, but we are working on that. We are cognizant of that thing and all. So, but as of now, what we have shared that I think 20-25 crores further reduction will come by year.
Actually, I'll answer you. You know, important of the long-term debt. Long-term debt, we are reducing at least this year by 20 crores. Okay, more than that. जो शॉर्ट टर्म डेट है, जो वर्किंग कैपिटल है, आप भी समझते हो बाय एंड बाय इट इज हेज समवेयर, बिकॉज जितना डेट होता है बैंक तो तभी रहता है ना यार, इतना मेरे रिसीवेबल मेरे होते हैं. रिसीवेबल हमारा कोई बैड डेट होना नहीं है, बिकॉज वी आर प्राउड टू से वी हैव बैड डेट प्लेन एंड सिंपल जीरो. ओके, बिकॉज इफ वी सेल टू कस्टमर irrespective, even if we reject some part, he will first pay us, and then he will debit us. He will not, discipline. Imagine I reject five parts, and out of 100, he will first pay me 100. Then he'll say, since we have you have sent 5 these wrong parts, kindly send us a credit note for this. This is discipline at our customer. We have no bad debt, and by short term debt to yaar receivables से managed होता है, but long term we are reducing this year, and some more things as they send. Let the time come, we'll really announce.
Sir, please two questions. Let's please move.
All the way from
We have other questions.
Okay, so
1.5 hours. Sir.
Okay, so let him answer one more question here.
On the working capital, furthermore increase in the last 6 months. That is, we have planned to reduce inventory and increase the trade payables.
Number of days में आप देखो अभी अगर मेरा budget turnover, two things. One which I have explained you guys that you know my Red Sea crisis, my shipment period is the products which we are manufacturing now. We are shifting to a larger products and all where my raw material component is higher, my manufacturing process is higher and all. And we are a growth company. So please understand that these changes will come. But if you look at the number of days and all, वही हमने budget turnover अपना achieve करा होता तो आपको number of days में ज़्यादा कोई difference दिखता नहीं. आप अगर number and I'm presuming आप number of days में comparison कर रहे हो.
Absolute number as well as the incremental sales.
Absolute as compared to this. And second thing, what I'm saying is our product segment is changing. We are maintaining, because if we are manufacturing, manufacturing only small products and all, then the value contribution and the absolute amount of those products would be lower. But that is not a sustainable growth strategy. The sustainable growth strategy would be that we have to reduce our number of SKUs. We have to work on a bigger products and all. Commercial vehicles and passenger car products would be are high in value and all. So that thing will come in. And debtors में जो आपको दिख रहा है वो basically predominantly because of the higher shipment period, because मेरा material in transit are also. But having said that, these things will start easing off now. But what I'm just trying to say, we need to understand that our product segment is changing a bit, and that is how the growth, because we can't keep on going on those small products only. There's a limited growth which can be there. So we have to focus on bigger products. Yes, sir. I think he's asking.
Sir, I would request you to announce your
Announce your
name.
name, because we need to record it. What's your name?
Harsh. My name is Amit. Two questions about are we ready for the latest charges in office? I've seen him saying that he wants to put tariffs on cars. So are we ready for that situation? Because he wants parity. He has shown his intention.
I'm sorry, I was just reading some message. Can you repeat your? I didn't hear you.
So are we ready for the situation where Trump, go ahead and put tariffs on European car makers? Because obviously they sell all over, like in US.
Yeah, actually, politicians across the world, you shouldn't believe them beyond a limit. Yeah, it's not that simple. So
I just wanted to know.
Yeah, these are two. These political speeches cannot be the base for deciding the strategies, because he is saying that he will put tariffs on EU. He says he'll put a wall on Mexico. He says we'll put 25% duty on NAFTA. It's not that simple, because if he threatens EU with 20 additional tariffs, where is NATO will go? These are all political speeches which our politics also do it. Strategies always work. Business strategies work in a different. It's not that simple. And I personally feel okay. If that kind of situation happens, we are too small a company to mitigate ourselves, and whole of EU will come to a crash. Whole of supply chain will get disturbed. These are not those simple. Because these discussions coming on business forums is good, but political speeches तो कुछ भी होता है. हमारे मोदी साहब भी बहुत कुछ बोलते हैं, तो वो थोड़ी जाता. So these are not the basis.
The question was that, in fiscal 24, out of this 410 crores, the percentage of revenue that came from the OEs versus your...
It's 100% OE.
100%. But you had...
Apart from ZF,
ZF is also as good as OE. He has a $40 billion here. About 9% goes to ZF, rest all is 100% OEMs.
And then the second question is with respect to, we are very obviously strong in the European car, among the European car makers. What are the thoughts about getting into the US market? Because that's the other...
That is a very big issue which we have addressed. Malaj, you have told us we have already started addressing it. In fact, me and Prabh were already in US, met with one of the major customers. They rather invited us for discussion. And we are already started dialogue with them. They have already sent us a RFQ. We are preparing the offers. So our focus is also to make some impression in US market. As I told you, that we have already started discussing big way with domestic passenger car companies. Same way we have started focusing on US market also. So eventually that is also one of the area I will admit that yes, until now we did not focus. Because since we were getting so big business from Europe, so and you cannot handle much more than what you can achieve. So we were not focusing on to this. But now suddenly this onslaught has come, and we have already started with this correction course. Is already there, and hopefully something will happen. Because although these big companies, they take their own sweet time in taking action. But from our side, we visited, I think, probably in September. In US, when we visited, in September we visited. So we started because moment when this H2 numbers were announced by our OEM, so we realized, yes, eventually H2, whichever way will go or not, no matter, we were really knowing that 2025 cannot be so rosy. We have to start hunting some new avenues. So the US is also one of our area where we started working.
this back-to-back nomination from a passenger car OEM from Europe is actually helping us to have a very strong foothold.
Yes.
I mean, it's a big thing. We were not there directly as a tier 1 supplier to passenger car till now. And then within a span of 6 months, getting back-to-back 2 nominations from, of course, such a big name. So that has actually helped us in having a very strong foot in other geographies. It's your name, please.
So your name?
VP Rajesh, Value Capital.
Please announce your name.
I'm Rahul Agrawal. So this second nomination that you spoke about, which you just received, and it's going to be a material project, much bigger one than the previous one. When do you expect that to get into mass production? And
It's somewhere middle of 2026.
like FY27.
FY27, yeah.
What sort of peak revenue potential is possible? Like, what's the revenue that at full utilization you could reach with the current facility?
Difficult to answer. It all depends what customer base we get it. Because, as I told you, revenue comes basically what, because I tell you, if suddenly I get very big order from a two-wheeler business, revenue increase may be different, but margin increase will be different. But if I get from, say, truck maker, where parts are very big, raw material content is very high, so revenue will be much higher. but valuation will be much lower. So it all depends what it gets. Too difficult to give you an answer like this. It's a hypothetical thing. What business we get? Because one thing which you have already seen in our factory, we have tried to create a manufacturing setup which is very flexible. Okay, so because barring few equipment which are dedicated equipment for a dedicated product or a dedicated product profile, but by and by this equipment are flexible. कि वो आप उसमें motorcycle का part भी बना लो, truck का भी बना लो, something like that. Okay, so it depends which customer goes. But as we already explained in our initial numbers was 500, how much? 550 crore. So obviously that much capacity was there. So you can really make out there around 550.
They had about 60% utilization.
So if we were achieving 550, then of course our utilization will be about 75, 70, 75. But our benchmark is about 75, 80 because we are a batch type industry. We cannot go beyond 80 because we have to do small batch production. We have to change many setups and also. But if we were doing 550, we would have achieved our optimal.
One last question. The products that you make for your customers, are you the only supplier or there would be other suppliers that you make?
Very good question. I'll say this is a very, very unique USP of our business. Whatever product we supply to any of our customers, that particular part we are the only supplier. And our agreements are always till that product sustains. Because our agreements are for the platform specific. They launch a product. So whatever numbers it produces, we have to supply to them. And we cannot say no also. Because when they give the business, they always take from us a commitment plus minus 20%. Some customer, this customer which ordered this BMW project, this time since it's electric car, they are also not knowing which way wind will go. They have taken commitment from us plus 40%. And of course minus 40 also. They say we do not know. With this number, it may go plus 40, it may go minus 40. You have to commit. So this is the USP of our product. So we do not have any threat that tomorrow this business will get there until we perform. If we don't perform, then they will cut us down. So here is a little bit of, risk and opportunities both. When you are having so good, you have no risk of losing business. But there is a kind of flip side also or a threat also that you invest, and if company that OEM doesn't pick up because he's not selling, then you are already losing and the situation which has ended up today. Imagine if there were two suppliers for each product, why we need to invest so much? So this is a risk and opportunities.
Yeah, my name is Vedant. I just have two questions. One, with regards to the shift in manufacturing towards India, how much would you say has already happened and how much sort of do we have for more to move towards India or China?
The market is so big, you can't really.
In terms of percentage, if
you can't substantiate because it's too big a market, and like we went to this US customer. In past 20 years, they have acquired agri-machinery business, different tractor manufacturers. So one company in Germany, one in US, one is in Italy, one is in India, and then they were all fragmented suppliers. Now there is one private equity, he has acquired that entire company. Now they say, let's reinvent the supply chain. Let there be a global supply chain. The whole of world is together. So if I am invited, others are also invited. So this is it's a continuous churning thing. You can't really substantiate. But in one line, I can say there is a huge opportunity. Only thing is you should have technological capabilities, you should have money, and you should have manpower. Business is enormous.
Second question is a more hygiene question. I noticed that there are about 45 to 50 crores of loose tools and like spares inventory sitting on the balance sheet right now, which I think is about 2 years of like loose tools, tools and spares. Because last year our loose
Consumption
tools
eating everything.
Not specific, it keeps on moving.
No, reason I'll actually the idea is suppose you are putting 5 crores of tool consumption. You have 10 crores of stock. So you say 2 crores. So what I'll say, first of all, these loose tools are very high cost tools. And lead times are anything between 6 to 8 months. So you have to always keep the inventories for a consumption. Then as a safety also, something breaks, something fails, then you're gone. So that is the reason. And secondly, like you have seen, everything is cutting. So if one tool is working, it doesn't mean that it will now keep on working until its life. After few components, we have to remove it, resharpen it, send outside for some treatments. So we need one set on the machine, one set transportation between the coating company, one set always as a standby, one set always in the main stores if something fails, some transportation strike happens. So this is how we have to maintain those things.
Okay, just one small question, like in the screen.
I think we end the call. Questions I'm still here, we can answer.
Yeah, maybe have online people are all. Yeah, so then yeah, I उनको conclude कर दो.
So I would like to extend a special thanks to the management team for their detailed and patient responses to all the questions. And on behalf of the management, I would like to express our sincere gratitude to all the participants for joining and engaging with us today.
Thank you.
Thank you all the investors who have joined online, and see you soon. We keep interacting every 3 months. Yeah, thank you.
I
अभी तक हमारे घर पूरा ऑफिस